Good morning and good afternoon, everyone. I'm excited to be here today to introduce our SGS webinar, Top 100 Mineral and Mining Companies ESG Reporting Trends. Today's webinar will cover a short overview of SGS, top 100 mining companies, reporting and common frameworks, governance bodies and oversight, environmental topics and targets, social topics and targets, third-party assurance levels, overview of mineral and mining leadership practices, and Q&A. Please feel free to enter your questions in the Q&A box throughout the presentation. My name is Kim Lefrancois, and I'm the ESG Business Development Manager for North America here at SGS. I've been in the testing, inspection, and certification industry for nearly 10 years, working with many different clients throughout various industries. The other speakers joining me today are Adam Hammis. Adam is the ESG Director at SGS and has 20 years of experience as corporate ESG sustainability consultant, author, and instructor. Adam has founded multiple organizations and has an MBA with international education and leadership experience, integrating ESG, CSR, and sustainability into corporate strategy. He has also taken many different courses to become a competent and effective resource for ESG and sustainability. The other expert joining us today is Harsh Vasoya. Harsh has 9 years of international experience providing climate change and sustainability solutions in many different industries. He's been conducting assurance and advisory projects across multiple frameworks and standards and has multiple ESG thought leadership publications in the field. We're in great hands today with Adam and Harsh. I'll now pass it over to Adam so we can dive right in.
Thank you, Kim. And we have SGS in brief. I'm going to give you just a moment. But Kim, can you mute yourself? I do think we're starting to hear a little bit. Okay. So SGS, if you do not know us, I won't spend a ton of time, but we're a very large global publicly traded company with boots on the ground around the world. We're the #1 tech company, testing, inspection, and certification company in the world, and we have quite a reach. You can find out more about us. Sustainability is not new to us. It's embedded internally throughout, from the board level down, from the CEO to every employee. It's a core fundamental principle for our success, and therefore we've been involved in working groups, creating most of the standards, or testing, or becoming an accredited verifier for all the standards that you have heard of probably. We're very heavily involved in the field. I will say that we, much like our clients, maybe more so sometimes because of our reach, we are rated by all the same agencies that you are, sometimes more, but we rate very highly and we're very proud of that. We also have as of recently, if you look in the news, I think last week we were named the 6th most sustainable company in the world by Time Magazine. I'm sure we'll be putting that in our marketing as well soon. And we have, from just in the mining industry specifically, SGS has an entire natural resources division. We have a mining focus. We have a sustainability value chain offering for broad services across mining and minerals. If you're not familiar with those, you should get familiar. And I'll just say we also have become an award-winning storytelling. If you go to our YouTube channel, we produced an amazing video, which is a mining case study with Matagami First Nations in Northern Canada with a mine. We facilitated a stakeholder engagement process with them, as well as other services. So just recommend checking it out. Mining is not a new field for us. I'll hand over, as we talk about our research, to Harsh and let him tell you what we did.
Thank you, Adam and Kim, for that introduction, and welcome everybody to today's webinar. The top 100 mining companies that we have selected is based on the operations in US and Canada, which is the top 100 companies in the sector of minerals and mining. Why specifically top 100 is because they are the ones who would have a major influence by the revenue. And in the sector, if they are taking significant steps towards ESG, that can definitely be a light path where all the different companies who are willing to embark on their journey or are already looking from the peer comparison, they would set a very good example. So, we took a lot of time and effort to understand the trends in sustainability and understand how they are, having their KPIs weighted, how they are having their targets set, and how are their governance all across the sector they are maintaining. So, in this entire research, we'll be seeing a lot of different KPIs and a lot of different dimensional across different slides. So, looking forward to it.
So one of the questions we'll ask you is the organizational thresholds, I guess, or a milestone that you might have reached, is to really understand what Harsh just mentioned. There's 100 companies. Obviously, we're going to show you what they're doing, but what is important for you is where you are in the process and how mature your program is. And so the first question we would ask is, have you published an annual ESG or sustainability report yet? Could be yes, could be no. You might not know. I can tell you SGS has. We were the first to publish an integrated report, which is our financials alongside our non-financials. In the TIC industry, we were the first, and that's quite a bit of maturity level, but we do this for a living. But it is a lot of effort. So it could take a year, 2 years, 3 years to put your first report together, although you do eventually end up getting on like a 1-year cycle most often. But the answer to us, if we were to answer that for SGS, it would be yes, but we were interested in what you have to say. And if you have, I'll give you a few more seconds to submit. And then just to let you know, we'll never give you an off the shelf, you should do this. It's not prescriptive. It's just nice to see the trends. But it's really important to really base any strategy that you're going to undertake on your own business and what creates business value for you. What are your drivers, things like that. So our answers are, thank you, 83% here today, and the 16% that are no. You're still in good company. If you need help, obviously you can talk to us, but it is something that's becoming more and more relevant, more and more prevalent in the industry. It's just that there are reporting on material topics. Why that's happening is a little bit of definition before we jump into this today, but there's some differentiation and people use these words very differently. So we're going to talk about it, how we talk about it, how we think these words should be defined and how they have historically been defined is that financial materiality is ESG. It means non-financials that are material to your business. It's a term that came from the public sector, from investors, from accountants. It's been around for a very long time. And it specifically just refers to environmental, social, and governance topics that are material to the company. Those are very specifically, if they're talking about environmental or social issues, how are they impacting our business's bottom line? It's very non-controversial. It's actually a very kind of pencil-pushing accountant CPA exercise, and you really want to look at your bottom line. Where people get into disagreements are impact materiality, where it includes the business's impact on the environment and on society. That is often where sustainability is used. Again, people use these words very differently in different contexts, but double materiality is when you consider both. And if you look at CSRD, some of these standards that we'll talk about next, coming out of Europe, it sort of has ingrained double materiality, whereas a lot of the other family of reporting and standards and frameworks that we're going to show you next are often just limited to ESG and the financial materiality conversation. So at the top, I said you can organize these standards. CSRD is more of a regulation, so it's not on here. But CSRD out of Europe would be on the bottom, where financial materiality, there was integrated reporting, SASB, TCFD, they all combined in the Value Reporting Foundation because they're all investor-driven reporting standards and frameworks. About 3 years ago, then they actually absorbed into the IFRS. That's the International Financial Reporting Standards Foundation, and they came out with the S1 and S2 standard. So it's literally best practice for almost every country in the world, except for the United States, who we use GAAP, generally accepted accounting principles. But IFRS is, for instance, in Canada, being translated into the CSDS framework, and that's going to be what Canada uses, but it's going to be based on IFRS S1 and S2. Again, it's all financial materiality driven by investors, but then you go below, GRI is a little more forward. I would say that they're trying to align with SASB, which has individual sector by sector standards, but they are very much a double materiality. They include far more KPIs that are sort of like good for you, good for the planet, good corporate citizen type of metrics and KPIs, as well as the UN Sustainable Development Goals. Those are targeting cities, countries, nations, a lot of municipal, governmental type of KPIs, but they're also rolling out tools for businesses like the SDG Impact tool for investment, as well as management systems for corporations. So they're all trying to align, but there's a very clear delineation between CSRD, GRI, the UN Sustainable Development Goals versus what's coming out now, IFRS, S1 and S2, which is going to be adopted worldwide for financial materiality purposes. And then I'll hand it over to you, Harsh, to show what we found in our research.
Thanks, Adam. And as we discuss our first statistics, I'm very happy to know that the group that you are with are also part of the similar statistics, where majority of the group have either a sustainability report or they have the exposure towards it. And similarly, we saw in the statistics that majority of the companies do have a sustainability report, or they are having a dedicated website or a web page where they're disclosing all this information following very specific standards or a framework. So what we observed that 85% of the companies are looking at reporting on ESG or sustainability, and there are various reasons and statistics behind it that you'll be seeing in the coming slides. But while they are reporting on the specific ESG and sustainability initiatives, programs, as well as the targets that they are taking, what we observed that they are not only using one framework or standards to report, they are using multiple frameworks and standards in conjunction to report on their performance. And especially if we see, the top ones are like GRI, SASB, which drives the entire sector. But with that, we also saw that there is a drive towards IFRS, which Adam rightly said that in the North American space, especially in Canada, the IFRS CSGS is the next regulatory assessment that is going to come most probably next year and the year after that. So all the different companies who are proactive in this space are looking at reporting beforehand using the IFRS S1 and S2 frameworks to ensure that they are aligned with the regulations before it can even come into existence. So there are companies who are already taking that drive edge towards having those reporting initiatives undertaken. And it was very fantastic to see that how they are using all the different frameworks to report on their activities and trying to find which are the common factors which they can merge into one and report their entire stories for different group of stakeholders, because all the different frameworks are looking from the financial materiality towards the impact materiality, and how they are trying to have everything included into one report using different frameworks. So it was a very good statistics in the sector to see that majority of the companies are reporting and they are using multiple frameworks to report at the same time. So when we are looking at this kind of statistics, it is very important to understand that who is driving all these activities. Is it the employees that are asking for it, is the different stakeholders, or it is a top-driven activity in the organization? And that is where we would like to ask you in our next poll that as an organization, do you have a senior governance body or an committee who is driving your ESG and sustainability in the organization? You can say yes if you have a committee, if you have a board oversight, if you have different CSO who's looking at sustainability from a specific, if you have a manager who is looking at sustainability and driving the entire activity in the organization. If we talk about SGS, we have a top-down approach where right from our CEO, who is driving the entire sustainability initiative across the organization, and the award recently that we won across the globe resonates the same, where sustainability is not only something that we preach, but also practice at the very core of it, with different members participating into the same. Adam, do you have any insights on that?
We're going to share more details on that, but exactly what Harsh said. I think having a senior level governance body means that you haven't assigned it to like a quality manager. And I'll say this with utmost respect, because this is often how it happens, but thinking that ESG and sustainability can be assigned lower in the organization just doesn't go well. And when you have a senior level then it actually becomes a financial materiality conversation. It requires people at that level in the company. They're the only ones qualified to determine what's material and what's not. And that's why it becomes essential, as you'll see in most of the frameworks and standards.
Absolutely. Thanks, Adam. And if we see the statistics, 100% of the companies are saying that, yes, they do have a senior management looking into the ESG, very specific way. And they have, I would translate that a very specific parts where they are taking. Just for the benefit of the entire group that are on the call, we would like to also go through that what are the different ESG cycle that a company should go in. Either they are in their initial phase or they want to have those integrated at a different phases. What should be an ESG cycle look like? Adam, I would hand over to you to explain that further.
Thank you. And so this is what the cycle that we talked about briefly in 5 steps. And these are the steps that SGS talks about, but they align with most every framework. And they're essential that you do these steps because you mature through the cycle. Like I said, it might take 1, 2, 3 years to put your first report together, but essentially you'll get on a single cycle where it's yearly. Awareness, you need to understand the issues, trends, and strategies affecting your business. That's when you set priorities you do a materiality assessment, you identify risks and opportunities. Often you're doing stakeholder engagement at this time. And then strategy. Harsh, do you want to mute yourself just for a second because there's some audio coming through? Thank you. And then strategy is when you take the results of that prioritization, create vision, KPIs, goals, and plans, and then you execute. You have, just like any business as usual, you have to have initiatives, projects, quality control, risk management, and then you report. And reporting is always on management approach. There's context, but also performance, real KPIs over time that you see. And the reason they do it this way is to manage risk. So the governance body manages that early part. They have to set company strategy from the top down. That's board, C-suite, VPs, directors. If you have an ESG or a sustainability professional who's dedicated, they're often sitting on sort of multiple committees, and then lead counsel from a risk standpoint. But that's often called the senior ESG committee. It could be the senior sustainability committee. It could be the senior sustainability working group. Some people call it different things, but it's essentially a senior leadership body that has to have insight into the company's overall strategy, structure, and business value. And then those people hand off to, I'll go back, those who execute and those who report. And that's why governance is important. And I'll hand it over. Well, one example is just from a mining company, that this is an example from a public disclosure that they have their board of directors, they have their nominating governance committee, and they call it their health, safety, security, and environmental committee. That's essentially what we're referring to as the senior level, next to their compensation committee, and then the executive team, management, and technical leaders. So they have elevated this topic to the highest levels of the company. And then I will give what we saw from our research back over to Harsh.
Thanks, Adam. And yes, we saw something that even resonates with our polls today, that majority of the companies in the sector do have a senior governance committee with definitely board oversight. But what we saw that all the companies who have a senior committee does not have complete 100% board oversight as well. So there are still few companies who are having those performance, having those initiatives and programs checked only by the senior committee members, and they're not taking the board oversight over the same. And this is something that definitely drives a different kind of change in the industry, where you have a board oversight and everything is governed by the senior top management. While we are doing that, definitely, one of the things that we look at is what kind of different initiatives these members drive in. So when we ask that, senior committee members to the board oversight, what is different? And the entire, section drives from what kind of commitments that you're taking, what kind of vision that you are taking into consideration, what kind of, activities and resources that are being planned for, and everything changes. So that is the reason, why you should have top management board oversight, and something that we also saw in the sector. And when we are talking about the different level of board oversight and the senior committee members, it is very important to understand that what are the different driving factors in each of the dimension of ESG. So while we are, moving from the governance where we have a very high presence, let's now have a look at what kind of an each dimension drive looks like. So moving on to dimensions, first I would like to understand from you that what are the top 3 areas in the environmental dimension to begin with, which would be material to your organization. If we talk about SGS in particular, since we are a service provider organization, we would say that for us, climate change definitely is one of the major impact material topic, as we have auditors across the globe, we have offices across the globe, but majority of our service time and as well as the operations are occurred because of our travels and the audits that we conduct. So we would say emissions would be one of the major area of impact for us, followed by energy management, because definitely where you have a bigger chunk of emissions for the organization, you need to have an energy management plan as well. And we would say management is something definitely something which will be very crucial to us. Followed by the third one would be a very critical in our case, being a service provider, but yes, it can vary from biodiversity to material sourcing based on what kind of year we are presenting. And this is the exactly same kind of dilemma that many organizations face, where what kind of material topics are crucial in the short, medium, and long term. So for us, if I say in a short term, definitely when we are planning to expand, when we are planning to have more organization branches, definitely material sourcing would be a critical material topic as we look for partners. But yes, if we are talking about medium to long term scale, biodiversity management would be definitely at our very core, considering the different vision mission that we are driving and the impact that we are driving to curb as well the emissions and energy management. So depending on what kind of phase of the organization you are in, your material topics, your targets, your vision changes. So if you talk about the group at large, what kind of statistics that we have received, let's have a look at that. Wonderful. And something that I would have definitely expected from the mining sector experts like yourselves, that waste and tailing management, most critical activity in minerals and mining sector, followed by material sourcing and emissions. So it's a very fantastic material topic aspect that you have shown, and we would like to understand when we are having this kind of topics, it's not just that how we are driving these topics, targets are associated with it. So I would request Adam to throw some lights on when we have this poll on the environmental targets at the same time.
Absolutely. And so one step is choosing your material topics, which is never easy, as Harsh said. The other is, are you able to set meaningful goals? And so has your organization set any environmental topics or targets when you have a material topic? I would suggest, from a strategy standpoint, we do some advisory. If it's material, then you should have a target. And if you don't have a target, you should ask yourself, is it really material? And yes, we would say that we have some science-based targets on climate change. We have definitely social topics that will come up later. But we've set some, in our integrated report for SGS, we've set very clear environmental targets around energy use as well, because it's one of our largest components of our greenhouse gas footprint. And if you probably have as well. But if you think about it just in the environmental, have you matured enough? You've identified your topics and you've set clear targets. Maybe they're internal only. It's very valuable to have them external, especially if your stakeholders are asking about that. But just the idea, especially if we stay in that realm of financial materiality, if they are material and you're including them in your reporting for that reason, a target is strongly suggested. So I'll give you a few more moments. Most people have answered, and then we will go forward. All right. So the majority, yes. If you're no, that's not, our hat is off to you that you're setting yourself up for success by identifying your material topics. And you also might be earlier in your maturity phase of you're not there yet. But we strongly suggest that you look at that and then you revisit those targets year after year because they do become very critical to show all stakeholders that are interested that you're serious. If you look at some of the frameworks and that are driving these, if you want to go look for topics above the list, these are the most common that we saw. But if you want to look for targets, you can actually find specific environmental standards that will define topics for you, and they'll just give you, here are very common targets that we suggest. For instance, it's really easy to look at climate action and look at the Paris Treaty, and people will just set 50% reduction by 2030, carbon neutral by 2050. But those types of targets that are publicly accepted, industry supported, well-defined are the easiest starting places. And we recommend looking at frameworks and standards for those types of guidance. And then I'll hand it back to Harsh.
Thanks, Adam. So, as Adam rightly said, the environment, if it's a material topic, definitely you should have a target associated with it. And when we talk about this kind of reporting in the public domain, what we observe that in the sector, there is a heavy drive on initiatives and as well as programs, but not only they are taking the initiative, but they're also communicating their story to their stakeholders. And a good 83% of the organizations out of all the 100 are reporting on their environmental KPIs. And while they are doing that, definitely, the different topics that they are choosing to report are, in synonym with all the different topics are very crucial from the mining sector itself. But if we see the top ones that makes complete sense for the different sector as well, is the energy management, the water, land use, as well as waste and tailings management. So, these are the topics where majority of the companies have discussed about their initiatives, have discussed about their programs, their long-term plans, what they are going to use, as well as how they are maintaining this material topics in their organization. While we are having those kind of initiatives and programs, the different type of target shows a little different story, where the topmost associated target towards the reporting program was towards the emissions, followed by energy and land use. While being in the mining and minerals industry, definitely emissions and energy management is one of the major crucial aspect of the entire organization plan, because that has a direct impact on the climate change as well as the different areas that you're taking program across, but also land use, because this is very specific towards the industry, and the impact that it has over the biodiversity as well as flora and fauna in the vicinity that is the operations are having is massive. And it's not just that, how we are going to associate and dissociate the land use, but also how we're going to rehabilitate and reforest the entire place. So hence, many of the organizations have taken very specific targets towards land use as well, and how they are going to have, taken as an operations and then leave with minimum impact towards the same. So it was very interesting to see that, different activities that were undertaken for different KPIs and then having an associated target as well. As rightly said by Adam, that if you have a material topic, you should have a target associated with it, just to have that kind of an communication to your stakeholders that, yes, this is very material to us and has an associated targets to it. While we are having so much of status, yes.
I'm going to share one thing, just because Harsh and I have the benefit of delivering multiple research projects on these same types of reporting KPIs. Mining is kind of unique in that you can see a strong high bar across many different environmental KPIs. Some industries are very heavy on one or two, and then the others drop off quickly. But what you'll see here is the mining industry has a balanced approach, and there's a significant number of KPIs that are getting equal attention, and that is not the same in every industry. So I just wanted to suggest that there's a lot of issues that mining companies have to deal with, and that does create difficulty. But you're in good company, because most of the companies see a balance, whereas some industries will have far fewer KPIs that reach those heights as a percentage of what's getting disclosed.
Absolutely. I totally agree with Adam. And, if you want to have a quick comparison, we do have different webinars listed on our YouTube channel as well, where, it can be directly compared to different sectors. And definitely so far, mining sector is having a great uptake. Moving to the social dimension, where, environmental topics and environmental impacts are definitely, one of the major crucial part of it. But also the same is the social topics in the organization, where it ranges from health and safety to different product and safety quality, as well as human rights, community, diversity and equal opportunity, and many further. So when we are talking about the social topic, it's not just that, how socially acceptable your organization is, but, right from what is the organization perceived as, what kind of different areas that, you are having your social license to operate, what kind of safety and operational, hazards that organization has identified and worked toward, what kind of different opportunities that our organization is presenting towards their different stakeholders that are associated. So there can be different topics based on the operations that you are having, the vicinity that you are operating in, and as well as what kind of organization that you are operating for. So, if we talk about SGS, definitely occupation health and safety is one of the major crucial aspect for us, being in the industry where majority of our auditors have to travel across all the time. And if we want to pick another one, would be training and education would be a very crucial one, because yes, we have a lot of auditors and they have to be trained and qualified to the utmost to ensure that the quality is delivered all the time. And I would say, that would be multiple ties between different KPIs, but also data privacy would play a major role for the industry and like us. Because yes, we deal with a lot of confidential information during the audits, and it's very important that all the data privacy is playing a major role in the organization. So yes, if we have to choose top 3 topics for us, that would be for us. But yes, if we talk about from the mining sector, definitely different topics plays a major role. Just to give an example, human rights is something that definitely one of the topic where majority of the companies, when they are starting the operations or are in the initial phase of land acquisitions, where they have to get that permissions to have start the operations, they would face a lot of human rights issues from the local tribes as well as the local community, because definitely that would disturb the entire land use. But yes, there are companies who are taking very active association into it, different talks, different stakeholder engagements to make sure that the impact associated with it is minimized. So let's understand what kind of statistics the group is driving currently. Wonderful. So yes, occupational health and safety is something of the topmost importance for the entire group. We would agree with the same, and followed by human rights, as I was just explaining that yes, it takes a lot of toll on the organization being in the industry type that we are in, and followed by others. And we would like to understand what others would look like. If you can type in the chat box, definitely we would like to discuss that more. But that is really very interesting to see that occupational health and safety and human rights is definitely the driving factor for the same. While we are talking about the different discussion on the material topics, I would hand it over to Adam to understand the social targets aspect.
Sorry for jumping the gun. And the QA, if you're looking for the chat, there's a QA box. You can just type it into there. We would love to hear what other is. But same thing with environmental topics is, have you set targets? And again, I don't need to repeat myself too much, but one is using the materiality lens to say, if you're going to report, which is a lot of work, you want to ensure that you're reporting on the things that are material to your business. And if you have identified from a governance body that these are material, then I would be curious why you wouldn't set a target for those, because you would, even if it's just to maintain good performance, having a target is really essential. We would say yes on the social targets as well. And Diana, thank you. I see the communities and indigenous people's rights. I think those would typically, in the human rights sector, we probably expand our definition, but it would include community relationships, local stakeholder engagement type of things, exactly what you're mentioning. So thank you. And I'll give everyone a few moments, but I won't repeat myself because social targets is explanatory. SGS does have social targets, a lot of ours, because we're on the diversity side, we have a gender balance. We don't have a lot of problems with diversity because we are in 210 offices, I think, in dozens and dozens of countries around the world. It's more about gender balance and leadership positions as well. But that, I think, is one of the key. We definitely have health and safety targets, very big focus on health and safety for our people. But I'll give everyone one more moment and then we'll move on.
And just to add to what Adam said, definitely the social targets are not the easy ones because they are the ones which requires a lot of time and effort to have a tangible benefit shown to the management as well as to their stakeholders. And you would not be surprised with the statistics.
Yeah. And to mirror what Harsh said, it's easier to measure things than it is to measure people. And so it's always critical that you slow down and be careful how you measure human beings versus how you measure a kilowatt hour of electricity, because there's a lot of nuance to it, and just human rights issues and respect for your own employees and the employees in your supply chain. So I'll hand this back. Oh, no, I'll just mention again, these are the platforms and the frameworks that are being used to identify topics in the mining industry, but these are the social standards that are also used to identify pre-existing sort of industry approved goals that are already out there. If you want to base it off of a pre-existing target, there is a lot of guidance out there for you to follow. There you go, Harsh, over to you.
Yes, thank you. And, I would just, say from the social reporting point of view that all the companies who are taking time and effort to report on their environmental KPIs are the same ones who are also reporting on their social KPIs, and with an equal amount of intensity as well, where this is very surprising to see that the sector, the kind of drive that they are having in ESG reporting, it's wonderful, because not only they are focused on their environmental topics but also equally on their social topics, where majority of the companies are looking to report on their occupational health and safety initiatives, community initiatives, and the relations that how they are maintaining the different diversity and equal opportunity, training, education, human rights. And there is, we see that limited drive on cybersecurity, but yes, there are companies who are very specifically and very defined way they are reporting on their cybersecurity practices as well. If we talk about the top areas that the companies are reporting on, would be definitely, I believe, Adam, there's an typo error, but the main two areas that the companies are reporting are the occupational health and safety and community relations. And then, as you rightly identified, that community relations, not only with the indigenous people, but at the community at large, plays a major role in the entire activity. And that is where we have also observed in the same. But at the same time, when they are having this as the top drivers, they are also focusing equally on their diversity and equal opportunity and training and education, where they are looking at different technology advancement. And with the recent conferences that we have been in the mining sector, we also resonate the same, where the major drive in the different conferences were also that what kind of occupational health and safety advancement that we can have in the industry, what kind of associations we can have to better our community relations, as well as what kind of different changes we can drive to ensure that equal opportunity is established across the sector, as well as what kind of AI implementation we can have to improve the training and education, so that more and more people, not only at the corporate but as well as on the site, can have those kind of an advantage. So with those kind of initiatives, what we observe that, as I said, that it's not very easy to take social targets, and that is where the number of companies who are taking targets are, I would say, almost half, where they are taking definitely targets towards their occupational health and safety and community relations, but the next best targets that they are taking is towards to maintain the diversity in the organization and to ensure that there is human right effort that they are taking into consideration across the sector. So while we are having this kind of reporting as well as targets, it is very important to understand that while you are reporting and measuring all this activity, and before it's going to your public domain, to your different stakeholders, investors, regulators, is this information getting vetted by any organization? Is it getting reviewed and verified by any third-party assurance provider? So, I would like to quickly again turn around to you and ask that, is your organization currently seeking a third-party assurance on ESG and sustainability data? It could be for different frameworks. It could be, for different KPIs, the whole report, and different initiatives that they are undertaking. You could be doing that for any specific platform, or different pressures, right from regulatory body to different investor groups or suppliers, and what kind of activity that you pursue as your organization. I would say for SGS, definitely our reports are assured by a third party to ensure that what the different areas that we have performed across the year, the different quality controls that we have internally established are actually in full control, as well as from the accuracy and completeness point of view being vetted by a third person. So this is something definitely a very crucial activity for across the different organization and different sectors. I would not say that this is very specific to mining and mineral sector, but this is something that is very crucial for the all the sector spectrum. So definitely something to look for. And I just give a moment to understand companies if they want to have a couple of seconds to reply on. Okay, almost everybody has replied. So let's see what the statistics look like. Okay, so majority are saying that they are currently not seeking a third-party assurance, and many of them are also saying that yes, they are undergoing, and there are few who are currently not aware. But based on the statistics, definitely we would have a different overview of the entire assurance practice altogether. But yes, if you're not undertaking your currently third-party assurance, that is something that either by mandate or by stakeholder pressure, we believe in some point in your maturity phase in the reporting, you will have to undergo this practice, because just to ensure that accuracy, completeness is maintained, and all the different data which is going in the public domain is vetted by an additional third party, which brings in a lot of value. So while we understand what kind of value this brings in and what exactly it looks like, let's have a glimpse of it. I'll hand it over to Adam to share more on the assurance.
So if you have not had the joy of seeing a third-party public assurance statement, this is what it looks like from SGS. They're really a scoping document that tells you what the final data was that was verified, the standard that was verified against, the scope of the assurance engagement, and then also the resulting opinion from us or another independent third-party assurer. But they are often published inside of a document, so that we try to make them look very nice for inclusion in your end-of-year reports. But they are a very technical document, but they're providing those stakeholders, your investors, bankers, others, rating agencies, with proof that you've had third-party independent assurance for verification. And Harsh, could you mute for just a second while we're doing?
I'm so sorry.
Okay. That's okay. Where it fits into the overall pieces, if you think of strategy all the way from the journey that you're going to take as a mining organization, for ESG would be you're starting out, you're just doing training, you're trying to raise awareness, you might get a materiality assessment. We talked about that in the governance piece, conduct stakeholder engagement, have consulting, and that's the execution phase. And when you get into reporting, your reporting team may seek pre-assurance. That's a non-accredited, basically a gap assessment of where you are against where you'd like to be. You don't actually check your final numbers, you check your controls, your data collection, your systems, your storage, and the quality of your process, versus an actual limited or reasonable level of assurance for a full accredited service that you get a statement of opinion for. It's like a CPA, but for non-financial information, that you would check the accuracy of the actual output, the numbers. For instance, greenhouse gas is a very, very common and the most common KPI. So you have scope 1, scope 2, and scope 3 emissions, and you would actually verify that that number is correct. You can do KPIs only. That's pretty popular here in the US and Canada. But if you look into like full report assurance, that's whether the entirety of the report is compliant with SASB or GRI or CSRD. Those are more comprehensive because they're checking the context of a full report, much like a CPA would do for your financials. And then if you look at, this is a little bit of a breakdown, just if you aren't familiar with it, that limited is a moderate level of sampling. It's really easy to do it in greenhouse gas because there's a threshold. There's a 5%, anything greater than 10% of your total emissions is sampled, and you get a negative opinion, which means we did not find evidence to suggest anything in this, any of these claims are false, which is just a interesting CPA kind of language versus reasonable, which is a high level of sampling. You drop that threshold down, and anything 5% or higher of your total emissions in that scope are sampled for all the way down to source evidence. And then you get a positive statement, which is we did find evidence to suggest these claims are true. And that's, you can do it just for KPIs, or you can do, like I said, that full report. The tangible benefits that most people, I think, forget, it's often driven by sort of external factors, but do not forget that the internal confidence in your own program, in your own systems, in your own final numbers are being used for investments and strategies as a company. So having internal confidence, getting a pre-assurance, or getting at least a year's worth of limited assurance, even if you are not required to by somebody, is incredibly valuable, because you can have confidence in your own program. Where the most common people see is the external confidence. You want your customers, a stakeholder, investment bank, somebody to appreciate that you've sent them the certificate. Often that's to improve a sustainability rating or a score, or just meet or exceed a regulatory requirement. So just to know that that's where the third-party assurance fits in. It's a crucial piece for the reasons we've mentioned here. And I'll hand it back over to Harsh.
Thanks, Adam. And I was a bit surprised that the amount of drive the different entire sector companies have on the reporting, right from the environmental dimension or governance dimension or social dimension, and the different targets, the amount of targets that they are taking. On the assurance side, majority of the companies are still having an internal review before it goes to the public domain. So I would say 45% of the companies are the one who are using a third-party assurance provider to verify the information using different standard type or different type of assurance. But yes, out of the 55%, still there were many companies who were having those data reviewed internally. But yes, they are not still seeking the third-party assurance provider, independent review from the different organizations, which brings in definitely, as Adam pointed out, a lot of tangible benefits. And the most common areas that out of the 45%, if we have the breakdown, the most common framework that we observed was TSM. And this is one of the framework, as being one of the person who have taken the TSM or lead verifier course, would say that yes, it brings in a lot of value from the sectorial point of view, as they have carved out the verification very specifically. But also with that, the ISA 3000-3410, which is the most common framework which is used for assurance to the limited level, was undertaken at a very high level. And the average number of KPIs that we observed that different companies are undertaking were 13 KPIs. But at the same time, I would also like to highlight that there were few companies who also taken full report assurance, and that was wonderful to see that what kind of amount of information that they have in the report, and still they were able to manage the entire full report assurance at a limited level. There were few progressive companies who have undergone and taken ISA 3000 combined assurance, which means and translate into that majority of their indicators have verified as per the limited assurance. But yes, there are a couple of indicators where they have been reporting over the years, and they have reached a maturity level where they can subject those KPIs to a reasonable level of assurance, which is much more rigorous, much more intensive, and requires a lot of dedication and efforts across the years to achieve that level of activity. So yes, there are companies who have reached that level as well. And definitely, it's a area where, as I said, majority of the companies are from the 55% having an internal review. I believe it's a matter of years only where they would be also moving towards a third-party assurance, where I believe they are still in the preparation phase to subject all the information to a third party. So it was very interesting to see that. And as in sector, we always want to always understand that yes, we have seen a massive drive in the reporting from the different dimensions, whereas drive which is still an ongoing on the third-party assurance, from reporting to assurance we want to close in cycle. What does the next steps look like in the industry? So I would hand over to Adam to discuss about the next steps.
Thank you, Harsh. And just giving a sense of summarizing, if you look at the data that we researched on the top 100 companies here in North America, you can see key leadership practices. So if you want to be a leader, these are the things that already are happening, and it's also happening in the past. So we are only able to look at public disclosures, and so that doesn't mean that they haven't continued to move forward. But if you'd like to be in that leadership sector or in those conversations, that establishing a senior governance committee to prioritize and manage your material ESG topics, ideally with board oversight, is very common. Measuring and disclosing performance per material topic that you've identified in an annual report is also the most common. Very rarely you'll see a 2-year cycle, but it's very common. It's way more common when stakeholders want to know progress. They want to know progress every year. The most relevant standards and frameworks being used in order were GRI, the UN SDGs, SASB, TCFD, CDP, and IFRS in that order. But again, as Harsh mentioned, there was overlap. So it wasn't one or the other. It was finding the right mix that worked for you. The most common environmental topics being reported on were energy management, conservation, land use, waste and tailings management. And then the most common social topics were occupational health and safety, community relations, diversity and equal opportunity training and education, and then considering TSM or limited assurance for a minimum number of critical KPIs that you feel are the most material to your business is always recommended. So those are our leadership practices. If you need to continue working on that, if you look at across the bottom, how greenhouse gas as a topic is very relevant, how it kind of mirrors everything else that we can provide you. SGS has a sustainability assurance team that we are both a part of, but we have SGS Academy with trainings. We do provide materiality assessments. We have very specific sort of greenhouse gas accounting, CDP advisory, SBTI, which is science-based targets, advisory services, but we don't do a lot of advisory because we work in the assurance space, so we're heavy on assurance. And that looks like pre-assurance, either for full reports in sustainability and ESG or a GHG specific gap analysis, or limited and reasonable assurance for just your greenhouse gas. It's called a greenhouse gas verification. Or if you're doing a report with multiple social and environmental KPIs, it's just called report assurance or KPI assurance. And you can do that to a limited level of rigor. That is sort of, if you think about it as dipping your toe in the water, folks often get a pre-assurance first, and then they see if they're ready for the limited assurance, and then if they're ready to mature into a higher level of rigor for that reasonable level of assurance, that's the higher level of sampling of data, and that just takes more time, more scope, and a little more money. But we can help you on all of those, as well as if you want to look at our courses, which we're very highly skilled in training because we have some of the highest technical team to be able to check other people's work as assurance providers. So our assurance providers and our lead auditors are often they design our training and often teach it. So we have both on the sustainability side and on the greenhouse gas side, a wealth of training, one-day modules that meet your needs, or we even have technical workshops. If you just want to focus on boosting your CDP score or your EcoVadis score, we're very good at that as well. The CDP climate workshop, we get a lot of great comments on. This is just one of our clients talking about how it helped them tackle their questionnaire. And we have a huge YouTube channel that is growing. We have over 100 videos, 100 hours of content that is free on demand for different industries, different topics. I think we're adding about a video a week. And so we highly recommend checking that out, subscribe, follow us, and ask us any questions you have after this. And last, I'll just say thank you. Kim is a great person to reach out to directly for any sales questions, but myself and Harsh have some technical background. She'll loop us in. But if you have any questions, we'd love to know what else we can answer for you today. You could type it into the Q&A chat. We've still got 5 minutes. We'd love to answer any questions you have. So with that, I will turn it back to Kim and everyone else, and we'll watch the Q&A box until it's ready. Any questions? So one that we often get on, it's an election year, and not only in the US, but in Canada. It's quite the election year, and we'll get the question of, should we wait and see? And I would say that there's no crystal ball for us, so that's not our jobs. But I'll tell you that at a minimum, what we see our clients, we always recommend that when proposed legislation happens, look in the broader context, look to Europe, look to South America, look to East Asia. The US, we follow, here in the US specifically where I'm located, we follow a little bit further even behind Canada, but we're about 5 years behind. We always catch up. It's very rare that we don't, because the entire world adopts these things, like I said, with IFRS. Don't sleep on that, because it's S1 and S2 includes greenhouse gas emissions. In the US, there's a lot of proposed rules on climate disclosure. That's the most heavily regulated topic in the world. And even if it doesn't happen in this cycle, it will probably happen in the next one or before, because it's going to be required internationally. So if you have any international business, don't wait. At a minimum, get trained on what the different standards require and what greenhouse gas accounting requires of your company, how to set targets, things like that. We're always here to help. But that's the big thing, is at least do training, but don't expect it to go away. It may get slowed down a little bit, but we are heading in that direction, full steam ahead in other parts of the world that then require the international business community to do this. Kristen asked, any insight on the future of CDP reporting, giving the move towards consolidated reporting through the ISSB global baseline, for example? So I'll let Harsh also share. I'll tell you my personal and professional opinion. They're two very different things. CDP is a ratings platform, and IFRS does align. So CDP does align and help you report to IFRS, because it used to align with TCFD, and that's really sort of the evolution. But they exist for two very different reasons. And I'll give you one clear example, is that the IFRS is a financially material-driven, investor-driven standard. They allow investors to make up their own mind. They don't put any performance ratings, and they never will. That's the standards and frameworks just tell you what to report, and investors make up their own mind. CDP, like all the other rating agencies, comes to a qualitative number score and gives you a ranking against your peers. And they just they'll never be the same. The CDP will continue to align with it, but there's far more questions asked by CDP, and it's almost becoming more of a supply chain management tool to help you look at, are some of my suppliers doing better or worse, and where should I put my energy? But CDP, I don't see it going away. It was actually for the first time listed specifically by the US government in a proposed federal supplier rule, where this is very rare, but CDP is getting so much attention, and it's the most used climate disclosure platform, that it's getting identified by name in regulatory schemes, just because people have a lot of trust in its methodology. And so that's what I would just say. I don't think it will go away, but they are aligning very closely, and CDP wants you to know that if you put all that effort in, you're going to be able to use that for IFRS or ISSB S1 and S2 disclosure. Harsh, thoughts?
Yes, just to add, definitely, Adam rightly said that CDP is not going anywhere, and currently from the announcements across both the platform that we have observed and keeping a close track on it, is that yes, they are working together and developing the standards, because both of them are having experts on the same different fields as well as the sectorial experience. But yes, if the question is that, by following ISSB framework, will you be completely aligned with the CDP questionnaire? The answer is definitely no, because rightly Adam said that, CDP is having a lot of different questions and very targeted one. Whereas if you are talking about the ISSB framework, the requirements are different. They are targeting different stakeholders. But yes, they are working together in the standards development, as well as to have those frameworks, and as well as the different areas in which you can align both the frameworks. They do have some similarities as well as alignment, which definitely will be coming in the frameworks. But if we are talking about if following one will completely align with another one, I don't think so. We are in that space as of now. But yes, working on one would definitely give some brownie points to have alignment with the other one. So following ISSB would be somewhat aligned to CDP questionnaires, and you will be able to respond some of the areas. But yes, both of them requires a lot of efforts to have the assessment done.
Both so much. That's all we have time for today. But please don't hesitate to reach out to us directly if we can be of any help. Thank you to Adam and Harsh for all this wonderful information, and thanks all for your time. Have a great day.